Hey, good morning. Yes, I hope you had wonderful holidays with your family, your friends, your neighbors, your loved ones, your community. I also hope you've had time to think about 2025 as a trader. What are you going to do to improve? What you gonna do? Rap is not afraid of you. Beat is for Sonny Bono. Beat is for Yoko Ono. So guten Morgen, everybody. It is 9 a.m. on Wall Street, about 30 minutes before the open of trading. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term and never risk money you cannot afford to lose. Let's start with your infrastructure. You're going to need a broker. You want an ECN. Why do you want an ECN? It's a business model based on you pressing the buy or sell button, and it enters that trade into the interbanking system through a pool of liquidity providers. Oh. Well, Wayne, isn't that what all brokers do? No, most brokers just throw you in a pool with other clients. Yeah. So an ECN, like Trader's Way, is incentivized to provide you a quality service. Other brokers are incentivized for you to lose money. So if you want a symbiotic relationship, try tradersway.com, an ECN. The other thing you're going to need in your infrastructure is you're going to need a way to do fundamental analysis and technical analysis, and you probably want some performance coaching. Along with Trader's Way, you'll have execution. So think of it as a Bloomberg terminal for retail traders and investors. It's not $2,200 a month. It's not even $2,000 a month. It's not even $1,000 a month. It's not even $500 a month or $400. So anyways, yeah, you should check it out. So this is what we're going to use today to look at all 7,500 charts you're probably interested in. And we're going to do macroeconomic analysis and comparative analysis of this data to create fundamental biases. Cool. My name is Wayne. I'm a currency trader just like you. 20-something years ago, before I was a Forex trader, I was a venture capitalist. Yep. Before that, worked at little companies. Probably you never heard of them, like Cisco Systems or Apple Computers. Yes. Neat. So that's me. Leaning against the building that FXCM is in on Water Street in New York City. Okay? We'll do the one that's best. So anywho. But yeah, so anyways, actually, Abdul, there is no swing trading group at Investor Bootcamp anymore. Yeah. Now I'm thinking about it. Yeah. Abdul says, well, let's visit that. So you can get this is your swing trading group, Abdul. This is your quant box group. This is a new group, and you can have all three for cheaper. But if you just want swing trading, bada bing, bada boom. Actually, you know what? Yeah, that is true. This is swing trading and day trading. There you go. That's what you're saying. Yes. You want to do swing trading, but yeah. So you'll probably want the technical trading team where it'll give you swing trading and day trading. Oops. So anyways, let's get on with that. So I need to do the disclaimer. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long run. Never risk money you cannot afford to lose. Yields came down. We were at 4.65. So to see it heading back down to 4.5 is great. I'm not holding my breath, but it's going in the right direction. Down is good. Oil's going up. What? So now we're at 71. Now, you have to go back through time. We went from 71 to like 67, to 71 to 67, to 71 to 67. Now we're back to 71. Gold, pretty steady. S&P 500, hey, we're all waiting for some up. Well, look, we're through a psychological support of 6,000. And now we have to decide what's the likelihood of market participants to plow new money into the market versus taking some profit. Well, up until now, I think we've had a lot of rebalancing and tax loss harvesting and washing of profits versus losses and all that kind of stuff, which is just the mechanical side of portfolio construction and management. And we have talked about this quite a bit, so this should not be a shock. My next concern is that we get into the new year and there's another wave of profit taking and we head down to, I don't know, like 5,500. We'd have to look at the charts. And that would be because people are waiting to take profit on their plus 25% return on investment that the S&P 500 had in 2024. Well, if you take profit now, then you're going to pay taxes in April 2025. If you wait till January 1st or January 2nd, I guess, is the real first day. If you just wait a little bit longer, you pay taxes not in April of 2025, but April of 2026. Yeah, I saw that, Sky Killer. Yeah, I saw that. Yeah. Well, the first thing you need to do is go back and cancel that original one. So, yeah. No. No, you're good, man. No, I haven't been sitting still. Anyways, 108 on the dollar. Okay, dollar's still quite strong. In particular, you can see that we have a risk-off mode in our daily evaluation. And Bitcoin now below 93. OMG. It was 93 and a half about 2 hours ago. Now it's 92.9. Oh my God, on the 92.9 on the FM dial. Yeah, wow. So down a bit, man. Wowzer, huh? Yeah. Holy smokes, eh? So we'll do the scatter plot in a bit. We'll do the gauges in a bit. Just kind of looking at our hit lists here. Sell CAD versus dollar, sell CAD versus euro, sell Kiwi versus euro, sell Aussie versus euro. And this is what we were doing the last 2 weeks. Sell Aussie, sell Kiwi, sell CAD. Now on the flip side, sell Kiwi, sell Aussie, sell CAD, sell Kiwi. So yeah, pretty much there, right? Okay. No, they're two separate things, Abdul. Think of it this way, Abdul. Some people don't give two hoots about fundamentals. Right? So they don't want to pay for it. They're like, I just want to know how to trade a moving average and a pivot point. And fundamentals are phooey. So I have to separate them. Other people are like, oh my God, the fundamentals that Wayne goes through is just crazy important. Right? And of course, they were two different organizations. The swing trading and day trading used to be part of FX Bootcamp. Then it became part of Investor Bootcamp. So there were different legacy. Meanwhile, this used to be called QuantBox. So now day trading and swing trading are all part of the technical analysis. And this, what used to be QuantBox, is now part of our fundamental analytics tool. Because because TRADARS is everything in one now. Their fundamental radars, their technical radars, their sentiment radars, their volatility radars. Which reminds me, I haven't even launched the sentiment radar. I totally forgot. I built it. Where would I put it? I guess it would under scalping. Where would I put it under fundamentals? Maybe I can pop it into fundamentals. Where would I put it? Under calendar or news? I don't know. Maybe I'll get rid of this calendar and put sentiment. I don't know. I got to figure that out. I keep building these tools. Anyways, let's move on.com. Let's take a look at the risk gauges. So here we're analyzing long-term treasury, short-term treasury, stock market, commodity market, dollar market, and volatility and options market. And we do that on 3 time frames. And when we analyze it, right now it still looks fairly risk-off. As of now, as of all this month, last week, nothing happened. So guess what? That's what is in the bias. And as far as what's happened in the Asian and European session, we have a -3. Why? Well, long-term treasuries are down a little bit today, and that's good news. S&P 500 is down, and that's bad news. Gold is flat. Dixie's flat. 2 years, right, is slightly up. That's bad. Yen is flat. Okay. And when you look at the options market, wow, it's favoring puts. The bears are winning this one big time today. And volatility is up 13%, and that is bad. Vol is bad, y'all. So, a little risky offy skippity scalping today, maybe? Well, when we look at the long-term evaluation of, rolling 30 days, it also is bearish. So we have multi-time frame bearishness. So walk into the market open with that in mind. You might be a bear or you're waiting to buy a dip. Remember, you're trying to create biases. So like I could skip ahead here and go to a scorecard summary and do it in greater detail. And perhaps you're using macroeconomics to create bullish or bearish or neutral biases. And much of the time that's good. But at year end, there's a lot more going on than fundamentals. Like I said, portfolio management, taking profits or taking losses or taxes can impact what is happening in the market more than just pure long-term fundamentals. And so one of the things you might be doing is just comparing what normally is happening this time of year, whether it's bullish or bearish, and compare that to what is actually happening on the charts. And so that's not fundamental. That's much different. So you're comparing seasonality with technical analysis. And that may override the overall score because some of these are bullish, but many of them are neutral. But despite the macro neutrality, maybe, just maybe, some of these are offering short-term opportunities. So buying dips in the Dow, no, that doesn't smell good. But what about buying dips in the NASDAQ? It smells a lot better. So we're using all this data to form biases, right? So what's actually going on? Well, this is moving around a little bit. Some of these have changed in the last couple of hours, and so that's why you want to keep your scatter plot and look at it from time to time throughout the day to see where things are moving relative to their economic scores. Anything with a positive score, and these scores are just coming from the scorecards. Remember that we just did? So like Nikkei has a 10. USD CAD has a 10. That doesn't want to pop up. It doesn't want to pop up. But anyways, about 10. It looks like a 10. Okay, and yet Kiwi dollar, has a negative 9. What does this mean? Well, the congruency shows that compared to the Canadian dollar, TRADARS, based on comparative analysis of macroeconomic data, believes there's a higher likelihood that US dollar is stronger than the Canadian dollar. Is that true right now? No, they're actually quite neutral. They're about the same. But our assumption would be the probability in the long run would be USD CAD is more likely to be up and down. So if you were going to then carry forward the correlation, you would expect the opposite for New Zealand dollar versus US dollar, because one is, the dollar here is on the numerator, the dollar here is on the denominator. So all else being equal, you would expect Kiwi dollar to be down if USD CAD is up. And quite rightly so, it has a very similar score of negative 9. So in the long-term macroeconomics world, we believe that Kiwi and CAD are just about equally weak. But hell's bells. It's Kiwi dollar's up today. It's strong today. Interesting, huh? So that's out of position. So are you going to sell that high, or are you going to get out of the way? Okay. TRADARS just sent me an email. I found a scalp on euro dollar. And it's thinking dollar strength. Well, I shouldn't say thinking. There's a breakdown of a rising wedge and a breakthrough of a support at 104. See, I get it on my phone. Ooh. You want to see that a little closer? See? Probability 70.7. Isn't that nice? The following assumptions have been made. There's at least a 20 pip move. And the key level and chart patterns were at most 5 candles apart. So we have 2 different patterns on multiple time frames showing a similar opportunity. Anyways, so I get this via email. This is available at traders.com. And it just emails you when it sees it on multiple time frames. It's nice, right? So it's just kind of like a heads up, like, hey, Wayne, did you notice this move on euro dollar? I'm like, ooh, really? And you can go to your chart. Okay. Traders.com is not an alert service. It just noticed 2 patterns exhibiting patterns that are suggesting moves in the similar direction, and they're on different time frames or different patterns on the same time frame happening roughly the same time in the same direction and offer at least 20 pips. It's pattern recognition. It's not an alert. Somebody on the YouTube, somebody on the Traders YouTube, I'm running a headline news radar, and it put up. I guess I can just push this up here. I'll show you. It had a pattern, and Lucky said, "What? 10 pip, right? Take profit, and the stop loss is 30 pips. What is this? Why this type of right? Yeah, that doesn't make sense, does it? It's not a trade recommendation. That's the pattern. So it's showing you a pattern that it found, and then you have to analyze the pattern. And based on where the support and resistance was, well, resistance is resistance, and support is support, and the pattern is the pattern, and the leg is the leg of the pattern. These are all, how you say, defined, not opinionated. And then you analyze, well, where is the entry in this particular case? Where would the stop go based on patterns? And how many pips would that plausibly offer in the pattern? It's not a trade recommendation. And as Lucky says, where you're like, oh, there's not enough pips in that pattern to justify the risk. Yeah. But the pattern still exists. But you're right, that probably wouldn't be a good trade. Depending on your bias and your risk and your time frame, but you could look at it and say, ooh, it's breaking down on whatever time frame it was, because that's long gone, right? Whatever the pattern was, but we're talking about this thing over here. But let's say you wanted, let's say it was Aussie dollar. I guess it was Aussie dollar. And what if you were already a bear? and you were watching it on a daily chart, and all of a sudden this pattern shows up as bearish on a 30-minute chart. And you're like, oh my God, it's turning bearish on a 30. You're already bearish. Oh, there you are. Yeah, right on, Lucky. So imagine you were bearish on Aussie dollar on the daily time frame, and you're waiting for a pullback, and it's been rising into your sell zone, which is great. And then on the 30-minute, it shows you that it looks like it's rolling over, Lucky. Well, then you can say, well, if it's rolling over on the 30, that might be your opportunity you've been waiting for on the daily, because you want congruency on multiple time frames. But it's not a recommendation. It just is. It is. That's a pattern. A rising wedge is a rising wedge. It's not an opinion. And if the rising wedge is breaking, that is definitely not good for bulls, right? So it's pattern recognition. So if you're a bear, a pattern that is a threat to bulls might develop into an opportunity for you as a bear. But a pattern is a pattern. We're not predicting the future, nor are we just analyzing the past, because these patterns are in play. They're forming, they're emerging, they're happening. They may or may not come to fruition, but it's doing technical analysis, and that's what it's doing for you, Lucky. It's like, psst, psst, psst. Hey, Lucky. Okay, USD Mexican peso. Now, but if you look at this, that doesn't look like amazing trade. No, I would rather have it break and pull back and long and gone. But then again, I don't really want to buy USD Mexican peso under any circumstance, right, Lucky? So I'm like, well, if we were risk on and the dollar was already weak and I wanted to catch a carry trade, I might want to sell USD Mexican peso. Does this look like a good opportunity for that? No. Okay. Okay. You know what I'm talking about? So, yeah, it's doing technical analysis. It's not making decisions for you. That's your job. Cool. Doot, doot, doot. Do 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 do. Yeah, money markets not looking good. Hot money is getting expensive. Options market, as I already covered, is absolutely bullish, relatively bearish. Okay, COT isn't out yet. Maybe it gets updated later today or tomorrow. I think it's tomorrow. So we got to wait for that. Let's do some technical analysis. I'm sure you've already done seasonality and you've already done things like you've already pulled up gold and all that kind of stuff, right? You've already done all this. Gold's neutral, and guess what? It's not doing anything. Right? Yeah. Look at that. Does that look like a good opportunity? No. Not in the moment. Okay, it should be bullish, but it's not. Okay, take a walk, my friend. Take a walk. Should be bullish. It ain't. Take a walk. Don't do it. Let's check our settings. I'm looking at all Forex, all crypto, all stocks, all commodities, all stock indices, but only certain patterns. I'm even going to turn off reversal patterns. I don't even care. I don't care. Okay, big moves and, don't care. Key levels, that's this idea of trading back to means and stuff like that. I don't really care. Breakouts, that's a breakout of, I guess we can throw some. Let's throw them in today. So breakout patterns and just trends really is how I look at this. Trend patterns, breakout and emerging. Okay, let's try that, and we will focus on Forex. And see, these are the things that I like. All right. So I put on the breakout pattern. Why? Okay. These are the patterns that I like. Okay? I like that. I like this pattern. Doesn't mean I'll trade it, because ideally I line this up with my fundamental bias, which you may or may not get from traders.com. You have to, make your own decisions. But you have the tools to make those decisions now with traders.com. Then I turned on the breakout pattern, right? And what does this tell you? Well, this is a rising wedge. Is that strength or weakness? Oops. Is a rising wedge strength or weakness? Yeah, it's strength. So this pattern, is that an opportunity or a threat? Yeah, it's a threat. Because I don't sell rising wedges, ever. But you know what? If you happen to be a bear and you're like, man, I want to sell euro dollar. Cool. This is a heads up. It's right. It's a heads up. Hey. If you're a bear, this is interesting, but it's not an opportunity as a bear. You know what the opportunity is? Lower high. Think of it this way. If you are a bear, the only thing you are allowed to do is sell high at resistance. Resistance, right? That's it. There is nothing else for a bear to do. If you're doing something else, you're probably losing money. If you're a bear, you sell a lower high. So you don't sell the break, you sell the retest if you're already a bear. I have no problem if you're going to be a bear on this. And that would be, in that case, that would be risk off. And as far as our gauges right now, based on market conditions right now, that is not the dumbest thing in the world to be doing. So if that's what you're trying to do, this is going to be very helpful. At least this is a heads up. Now, is this a dip for a bull? No, not on this time frame. Maybe on a higher time frame, and you'll have to make your own determination on that. But this is a threat because of the reasonability of this new direction. Another way of saying it is, how many times are you allowed to break support in an uptrend? Never. Never. Okay. All right. So with USD Rand, this exhibits strength, and this is an opportunity, not a threat. Sweet. Aussie dollar, this exhibits weakness. Is this an opportunity or a threat? It's an opportunity. Okay, once again, if you don't know how to trade these patterns, there's a free download in the description below this video. Yep. And it doesn't put you on a sales sequence. You're not going to get 27 emails from me trying to convince you to sign up. The only thing is there's an automation. You fill out the form, and then it sends you the download link. And that's the end of it. So if you put in a fake email address, screw you! You get nothing. You get nothing for nothing if that's what you do. Yeah. But if you put in a real email address, you get real content that actually took me real time. Okay? Sal wants me to trade live. That'll make me a big man. What do you want to do, man? Okay? Let's see. The risk gauges said risk off. Cool. All right. So, all you need to know is to sell high at the open. So, one way to do this, silly Sally, do this. Okay? That's fine. Make sure you have your stop. Okay, 33,333. Now let's do 33.99. Boom. So I'm done. Now are you impressed, Sally? Was that difficult? Okay. Or maybe you'd like to do it on a different time frame. Okay, then I'll do it this way. Boom. Now I got myself a day trade, not a market open scalp. Now are you happy, Sal? I don't understand what the big deal is, Sal. I'm not here to be your sexy little YouTube trader. There's tons of kids, Sal, that have, right? Never been licensed and registered, never traded other people's money, never had a professional career in finance, probably never, doesn't own a retirement account, doesn't manage endowments, doesn't have a Harvard degree, never traded $1 billion in a month. But you want me to scalp Euro USD and make 20 pips and this is going to impress you? That, Sal, is going to impress you? Yeah, you might be in the wrong spot, bro. That's what impresses you. Yeah. All right. Yeah, that's exactly right. And those traders, Sal, don't want to put in the work to learn how to trade on their own, make their own decisions, and become an independent trader. They want some kid on YouTube to help them scalp 25 pips. No, I get it. Okay. It's just like, great. So what am I going to do? Make $300 a month on my YouTube ads because more people watch me? I don't want more people to watch. I want the right people to watch. Right? So, but thank you, Sal. And I probably hit you way too hard, Sal. I'm sorry. I know, maybe had too much coffee today, Sal, so I apologize. You've been a loyal, part of our community for a very long time. So I'm sorry if I came at you like a spider monkey jacked up on Mountain Dew, but I have had a lot of caffeine. So anyways, yeah. It's so funny, the things, right? Yeah. Yeah. Why should you sign up for traders.com? Well, I have two BMWs and a Porsche. Maybe one day I'll get a Lambo, right? My son and I last year at the Concours d'Elegance, we were going to put a bid in for a Lamborghini tractor. I don't have that kind of property. I only have a couple of acres. But if I had like some proper acreage, I would love to have a vintage Lamborghini tractor. Wouldn't you guys? I would definitely paint it yellow. Yeah. Well, I do think I use layman terms. Let me know if I don't. I certainly do not want to talk over people's heads. Yeah. But anyways, yeah, let me know. I'm open-minded, Sal. I accept feedback. Always have. Go on a podcast. Yeah, I am. And I'll probably run my own and stuff. I'm able to move forward on some of those side projects now. I'll do that. It's definitely in the works, guys. All right. So no diggity, no doubt. That is definitely got some bearishness. Let's get back to the platform. So like these patterns, I mean, look at how much time you could waste going through all your charts on all the time frames trying to find things to do today. Okay. And so you're like, you should already know if you're a bull or a bear on things, or in your process every day. Like for example, let's take something quite literal. Oops. Okay. You could start your day by looking at the hit list. Things you might be bullish on today, things you might be bearish on today. I would filter this further, like I said, by looking at seasonality and trend. So now you have score, seasonality, and trend. Score, seasonality, trend. Score, seasonality, trend. So you probably don't want to do this Euro Kiwi, but maybe you're into Euro Aussie. And vice versa. So now you have your hit list, and you have seasonality, and you have trend. So maybe these are the only things you want to consider today. Maybe nothing else exists. So then you go to the technical side and turn all those on. Gaussian distribution. That's funny. So now you say, okay, now you have 4 or 5 things you might be interested in buying and 4 or 5 things you might be interested in selling. You can further, and I didn't write them down, but further turn everything else off. So now you only have, let's say, maximum 8 things to consider as opportunities today. Okay? You're removing possibilities. And now you have direction, and you've filtered your opportunities. So now you're filtering your filter with direction, you see? And you're like, yeah, I could sell this, and you write that down. Yeah, you might want to look at Aussie dollar for a sell later today because you're risk off dollar strong. Okay, rising wedge breakout, is that good for you? Well, it's not an opportunity, but it is a heads up. So maybe later today you sell a rally around 104.30. Sweet. What about this one? Not interested, because you'd have that turned off. What about this one? Not interested, you'd have it turned off. Plus, if I remember correctly, we're bullish on this. Well, it's not bullish on a 15-minute chart. Can you guys see the power of this? I don't give 2 hoots, nor should you, that this is down. That's not a sell signal. It's just down. But you're a bull. Good. Don't be a bull now. Why? Bulls only buy higher lows. Well, we don't have any higher lows on this time frame. So this is a threat, but you should know. You should know. So you put it on your to-do list, maybe later today, maybe tomorrow, maybe next week, maybe next month, maybe next year. You see? So this is good information. It's just not an opportunity right now for you. But you need to know the difference. If you don't know the difference, like if you don't know what you want to do, like I look at this, I'm like, oh, I'm a bull. Is this bullish? No. Well, then that's a threat. Is this wrong? No, it's not wrong. That is quite factually happening. It is making a series on 15-minute chart of lower lows and lower highs. So is that an opportunity? No, bulls do not buy lower highs and lower lows. Bulls buy higher highs and higher lows. So you wait. Not now, maybe later. And the fact that you can do this quickly, like I'm doing this so slow, I can burn through 7,500 charts in probably 3 minutes. How could I do that? Well, anything that doesn't have a pattern has been analyzed. So there's only, how many pages is there? There's only 2 pages. And so there's probably only 3, 6, 9, 12, 15, 18. So there's no more than probably 35 charts that you're interested in. 35 out of 7,500. That's the money spent right there. You just analyzed 7,500 charts, 35 patterns, reliable, repeatable patterns, right, have been produced, in particular the patterns you like. So now you filter these 35 patterns with your direction. Do you want to buy USD Rand? No. Do I want to sell Aussie dollar? Yeah, maybe. Do I want to sell Aussie dollar? Maybe later. Aussie CAD? Pass. Euro CAD? Yeah, well, I want to buy it, not sell it, so pass. What about Euro Pound? Okay, probably a pass. Euro CAD, I'd rather buy it and sell it, but it's falling now, so pass. Okay, Kiwi dollar. Okay, got to look at my bias. Probably want to sell this, so this is an opportunity, but not yet. It breaks, pull back, so maybe I'll sell it a retest of 93, 93 and a quarter. Great. Here's this pattern, and then there's this pattern, right? Descending triangle, but I'm a bull. Do I want to buy this? No. Okay, pound dollar. Okay, this looks good because I probably want to sell this. It might break to the downside, or it has broken support. The next leg is down. I don't want to sell that. It might drop to 125.30, then rise up to 125.80 to 126, and then I'll dump it there. You see how fast I can just cruise? Because I already know what I want to do. Oh, I want to buy this. Does this look good? No. Okay, you see? I'm the boss. I'm making decisions, huh? Isn't that cool? Yeah, David. Yes, annotation. I can't think of which. I know one book I just opened the other day from like 25 years ago, and it's annotated. It was great. Yeah. Whoa, whoa. Whoa. Almost fell over there. So I read this book in the 90s. So I read this book 30 years ago. And you'll see things are underlined. And I keep notes in the corner. Right? So this is 30 years ago. And every page, okay, every page has little notes in them. And so I annotate, I underline, and then I think. And then I write things down. But like they're almost journal entries sometimes. So like you read this passage, he tells a story, and then I tell myself, I did this to clarify my thoughts and make a lasting impression. Right? So, so I'm thinking as I read. So here's a story about Michael Dell. Michael Dell also spotted the opportunity. And I wrote, oh, I met Michael Dell in 1994. And I'm like, yeah. So I knew who that was. And I just, little things like that. I can't see anything sort of important like any, but you can see I definitely have done this. Again, this is 30 years ago. Improve the way people work together, right? I'm taking all these notes. Inertia of ignorance. The inertia of ignorance. So, this is how I learned how to be a businessman. So I knew the guy that wrote this book, and he was my mentor's mentor at that time. And I actually do the stuff, right? And so, I went on to run companies based on a lot of what I learned here. Anyways, this is called the Leadership Engine by Tichy. Okay, but Eli Cohen so Tichy is I think he's a professor at the University of Michigan. Good school. And one of his students in B school was Eli Cohen, and he was a mentor to my mentor, who I'm still in contact with almost on a daily basis 30 years later. Yeah. I'm a very slow learner, David, so I have to be very methodical. I think too much, and I'm terrible at memorizing. I just don't memorize, and therefore I'm a terrible test taker. I learn through mastery. So I have to try and try and try and try and try. Do it again, do it again, do it again, do it again. Write it down, write it down. This is why I tell you guys, write it down. Put it on paper. Use a stinky felt tip marker. Post it on your wall. Print it out. I have to see it. I have to smell it. I have to write it. I have to think it. I'll even say it. So, for example, the training courses I do with you guys is a form of me reinforcing things that I've already learned. And then you have to think about how to articulate it to someone that is just starting on the subject matter. So as I write it down, and then I think about articulating it, and then I actually present the content to you, I am once again learning. Other people seem to be able to just knock out a class, easily bang out an A on their final exam and move on. But 2 years later, they've forgotten 90% of it. I'm not like that, but I know and I remember. So that's why I do that. That's my survival mechanism, huh? So if you guys look at this USD Mexican peso on the hourly chart, okay, I do want to sell USD Mexican peso. I'm not certain that it will happen today, but I'm open-minded to it. See, I don't want to necessarily do it today because it's not currently risk on, and selling this would be risk on. The second thing is it's an up channel. I don't sell up channels. But you're like, but Wayne, it's got a gray arrow. Yeah, that's just showing you the next leg of the pattern, and it's an up pattern. So down to up. Well, that's not bearish. Okay. So it's, right? It's a threat to bulls, but it's not an opportunity for bears. You guys loving it? I love this stuff. I love it. Makes me so happy. Okay, so let's say you wanted to be a bull on the yen pairs. Is this an opportunity? No. But if it instead in the future, if it did that, and then it did this, then yes, that would become an opportunity. And we'd be going this way. So I'm interested, but I wouldn't call that a severe break yet. So it's more like if it goes way up here, which is a higher high, okay, then yes, I'm interested in buying a higher low, which is down here. So we're still here, 1. It needs to go here, 2. Then it needs to go here, 3. And then I might take a long shot, but this is on the daily. Oh my God, that could be a week. I know. Are you using your weekly charts? I hope you are. Okay. I'm a bear here. Okay, but it's rising today. You know what? I don't care because I'm going to sell it high for all to see. It's rising today. Why should I care? Oh, well, Wayne, you have to be in every trade in every direction on all time frames. No. So, okay, if I wake up in the morning and it's 1:45, what do? I sell the kiwi. I sell the kiwi. So I'm a bear. That's it. So when I see an opportunity, maybe it's a role reversal, maybe it's a trend line, maybe it's a moving average, okay, I'm going to sell. And it just reminds me of it's trying to head up right now. Great, good for me. Am I going to buy it? Heck no, are you nuts? Right? You be crazy. You be crazy. You see? Lots of profit taking today. Makes sense. Al Yee says, hey, do you typically see a weaker stock market when the dollar is strong? Aha. Yes, but let me correct your statement. Okay? Do I typically see a strong dollar when the stock market is weakened? Yes. I do not believe the dollar makes the stock market fall. Now, lots of people will love to argue with me over this one. Luckily, I know I'm right. Look, money is a medium of exchange. Yes, it's a unit of account and a store of value. Sure, but let's focus on the medium of exchange. So money, the dollar, goes up and down and back and forth based on the assets that we wish to buy and sell. Maybe you're buying or selling bonds. Maybe you're buying and selling stocks. Maybe you're buying and selling iron ore and coal or wheat or beef or sorghum or pork bellies or beef or diamonds or gold, nickel. That's what matters. Okay? Maybe you're buying a service from a foreign country. Or maybe you fire your foreign service people, whatever you're using that for, because you can't afford it, or the project's over, or some other thing related to economics. Well, that'll strengthen or weaken the dollar, but not really the other way. Now, if you're a foreigner doing business with the United States, that might be different, because the dollar could get stronger and you're like, oh my God, I can't afford Netflix anymore. But I think Netflix charges you different prices in different countries. But I don't know, like anything dollar based, yes. But I think a lot of people mix this up, even professionals. You definitely hear this all the time on financial TV, where they say, yeah, the stock market's down because the dollar's strong. And then you say, why? And, oh, well, the strong dollar is hurting companies that do a lot of business in China. And like, yeah. But that's all longer term. You can't tell me the dollar strong in the last 20 minutes is, taken out those companies. It's usually, the correlation is there. Like the correlation is not wrong. The part is wrong is causation. For example, the one I use all the time, Ali, is that when you eat a lot of ice cream, when people eat a lot of ice cream, they make the temperature go up outside. Because, right? Because it gets hot outside when people in society start eating ice cream. And I can prove it to you. I can show you the charts. The more ice cream you buy, the hotter it gets. Do you guys see the problem with that? It's true. I can prove it. The higher the ice cream sales, the hotter it is outside. But do you see the problem with the logic? I can do the math. It doesn't make it correct. And that's how I see it when it comes to the dollar. The dollar doesn't necessarily, the dollar, a persistently strong dollar over long periods of time, yes. But hour by hour, day by day, not so much. However, if foreign investors decide that the stock markets around the world are too risky, and they want to park their money in a safe place, in particular in an economy that they happen to do a lot of business with, like the reserve, right? They put their investments into a reserve currency to essentially hedge and lock in the value of their assets in terms of dollars. So you're like, oh my gosh, the stock markets are a terrible place to put money, right? So let's say a billionaire moves their money. They're located in Malaysia, and they have money in stock markets around the world. And then they're like, you know what? I'm going to dump the DAX. I'm going to dump the FTSE. Okay. I'm going to dump the Hong Kong. I'm going to, dump the ASX. they go to cash, and then they would bring it home to Malaysia, right? They're like, yeah, but they don't want to have their money in Malaysia either. So they decide, because they do a lot of business with the United States and therefore exposed to the value of the dollar, they're like, you know what, I'm just going to lock it up in dollar. So they move the money now to the United States, and they buy either the U.S. stock market, or they buy U.S. bonds or U.S. treasuries, or maybe they just leave it in the bank account and collect interest on it, or they put it in short-term treasuries, like the 2-year, maybe they put it in the 10-year treasury and earn interest on that. They can contact their bank and get like a certificate of deposit and be guaranteed a certain return over time. But all of that, LE, all of that creates dollar strength. But it wasn't the dollar strength that made them bail on the Australian stock market or the German stock market or the British stock market. It was their decision to bail on those riskier investments and move to a more conservative investment in the reserve currency that made the dollar strong. Yeah. In my humble opinion. Is that going to be correct all the time? No, there are definitely other situations. Like I said, persistently strong dollar over long periods of time. Yeah. Okay. Or maybe the Fed is moving some assets and not foreigners, right? So, but I would say most of the time, in my humble opinion, when you're looking at things from a global perspective, that would be the normal flow of capital over borders. And that's only going to happen with a reserve currency. So that's not going to happen with the Canadian dollar. Okay. Now, let's say Americans feel very comfortable and excited about the future, and Americans feel like the economy is good and the global economy is good, and they're going to be rich this year and next year. And they want to take on some risk because, buying NVIDIA seems too expensive. You're like, wow, and you already own some NVIDIA. And you're like, okay, well, I feel really good about the future. I already got a bunch of risky stocks. What else can I do to maybe pick up some good money? You could say that you want to take on risk and earn high income. So you want to carry trade. And you could sell the US dollar and put it into South Africa. Sky Killer, you're when you don't overanalyze the 10-year on QuantBox or in traders.com, because we have different service providers that some of them provide yield and some of them provide price, and you really have to, sometimes they're not displayed properly, so you have to think about what's going on. It's not as simple as so that's the complicated part of treasuries, right? Yeah, so just be extra careful. That's all. Yields are higher because the Fed removed 2 Fed cuts next year from the summary of economic projections. And I covered that live. So before the markets even freaked out, we already downloaded the report, read it line by line, went to the dot plots, analyzed the dot plots, and I was flabbergasted. And we had it all figured out 15 minutes before the press conference even started. Okay? Well, it would have been very similar, Al, people adjusting. So you need to use the Fed Watch tool. Okay? So I teach this all the time, so I'm not sure if you know this or not. Okay? This is just standard operating procedure. Okay? Standard operating procedure. So you want to look at how the numbers change. Okay? So if this went from 20 down to 10, and this went from 78 to 88, what's happened is money is shifted to the right. If this falls and this rises, then there was a shift to the right. So if this bar is growing and this bar is falling, a shift to the right increases US dollar. Vice versa. If this shrinks and this rises, US dollar weakens. So you could check this every day. Every day. Okay, and that'll give you an idea of how institutional money is flowing. So we're at 5.25. There's a 50% chance that we don't cut in March. And we don't cut in January. In fact, there's an 88% chance, 89% chance in January the Fed does not cut interest rates. There's a 50% chance they don't cut interest rates, and a 50% chance they do. And now we're pricing out, okay? There's a 35% chance that we don't cut in May, okay? And then it's about 80% chance between now and the June meeting. We'll get it, right? We'll get at least one cut. Okay? There's a 43% chance of one cut. There's a 30% chance of two cuts between January, March, May, June. Only a 7% chance that, right? And there's almost no chance in hell that the Fed cuts every single meeting. So what's changed, LE, is that these charts have changed and they've all shifted to the right since even before the Fed meeting. But very few people had that dramatic that quickly. See, the Fed is usually slow. But like, it really puts the Fed in jeopardy because they didn't cut. Then they cut by 50. Then they cut by 25, and now we're paused. Like, well, then why did you cut by 50? Why didn't you just go 25? Like, why the 50? And then then the dramatic change to now nothing. So you need, as the market figures this out, as it gets more and more economic data, and that's why you need the fundamental side of TRADARS. Okay? As you figure it out and as the market figures it out, they adjust. And that's where the dollar gets strong and weak. So it's very disappointing to U.S. corporations that the Fed's not going to cut interest rates nearly as much as they thought. Okay? And that means next year we'll have higher expenses for like borrowing costs and leasing than we previously thought, which means the U.S. stock market is going to be less profitable than we thought, which means the value of the stock market's going to fall because The value of the stock market is based on potential future profits. So if expenses are going to be higher than previously thought, they're going to be less profitable than previously thought. Guess what? S&P 500 down, Dow down, Russell down, NASDAQ down. Okay? And typically under that scenario, dollar is strong, yen is strong, and Swissy is strong. Yeah, that's neat, right? So we'll see if that develops throughout the day. Cool. Yes, some tariffs and some inflation. So I am going to do my annual outlook in about a week. And this is your opportunity to sign up for it. Almost everybody here is already signed up, but if you're not, please sign up. And we'll cover things like what has happened in the past and what were the variables in the past to create an analogous situation or scenario of, Trump and policy and tariffs and tax cuts and monetary policy and how do they all combine and work or not work together. We will go back in history and I will show you. My goal is not to give you my opinion. My goal is to show you how I got to my opinion, because you may look at the same data, interpret it differently, but I'll show you what has happened in the past and the logic of it. We'll also do a global outlook. We'll do a domestic outlook. We'll go seasonality, but then throughout the year, for no additional money, we will meet 3 more times throughout the year and update these outlooks depending on or based on what has actually happened, because there are so many variables this year. Does Trump do tariffs? On whom? Whom first? By how much? Is there retaliation? What is the retaliation? Okay. Do Trump policies get passed by the Senate or Congress, or does he have to fight for it? Just like there's so many variables. So we'll have to just keep meeting and updating and talking about it. And then on top of that, doing seasonality, doing technical analysis, and doing macro. So I've spent hours already inside the Fed database generating my own charts for you, because you are my sweet baby. You are special. So pay your $50, bro. Are you guys going to be there? Right? It's like $12 a meeting. Well, I hope so. I hope so. Will there be a recording? Yes. Every meeting will be recorded and accessible on demand for up to 7 days after the event. So if you need to review it 2 or 3 times, yes, it's usually data heavy. Like I said, I generate my own charts from the Fed database. JGB's always there. JGB is going to be our bouncer. He's going to stand at the front door and check your tickets. If you don't have a ticket, JGB's got a tire iron, and he knows how to use it. Oh, he's a teddy bear, though. A sweetheart. And a cattle prod. Yeah, Richard. Well, it's saying that. It's been saying that for hours now, hasn't it? Yeah, we're going to have to do a get together when the weather's warm. I'd love to have everyone meet up north, right? Jim, Jean-Guy. There's so many way up north, way up north. Even I've been sending emails to Guy, if you guys remember Guy, not Jean-Guy, but Guy. Denise is up north, probably not too far. Where would you guys meet? Would you guys go to Montreal in the summer? Who would go to Montreal? You prefer Toronto, Jean-Guy? Toronto's just so expensive. Yeah, or Detroit. Yeah. The thing is, I've never been to Montreal, so yeah, Canada's expensive, but in particular Toronto. Funny thing is, Jim, America's expensive for a Canadian, and then Americans go to Canada and they find Canada expensive. Even with the exchange rate, you're like, what is this? 27% taxes, you know. I mean, what are the taxes on staying at a hotel in Canada, right? There must be like provincial taxes, city taxes, federal taxes, GST taxes, right? Very often there's like the hotels add 10% in taxes, right? There's a hotel tax. Yeah. Yeah. That's what I'm saying. We should find a small town in Quebec, Jean-Guy. Small little town, beautiful little place. And, a beautiful old hotel maybe, and a nice restaurant and pub. We'll go canoeing with a raccoon hat. Yeah. Yeah, that's what Americans often think. Like, no canoeing. Anyways, guys, you guys are having too much fun. I have to go do something. I have to go do something business. I'd like to hang out with you guys more. I got to get down to it. So why don't you zip over and use the trading squawk box, the headline news radar for traders. I'll give you a link. And I will see you at 4 p.m. if you're in the day trading group. And we can vote on the canoeing thing. So anyways, so good to be back with you, team. I missed you so much over the holidays, and I was working on your behalf. I got some cool things underway. Hope to be able to tell you soon. So anyways, peace on earth, May the pips be with you. May your profits be above average. Cheers.